Hello traders, it's Wednesday, October 11th. This is Alan Hong, market analyst of GKFXPrime. So we're gonna share my daily analysis through this video. And first of all, let's review the major market movements. And the first instrument we're referring here is the dollar index in 4-hourly chart. So the US dollar index fell against a basket of major currencies on Tuesday, down 0.49% to 93.09. It was pressured by a surge in the euro, following data pointing to underlying strength in the eurozone economy. So it was a quiet day for the United States top-tier economic data. Investor demands for safe haven currencies like the yen and Swiss francs remain elevated amid ongoing geopolitical uncertainty on the Korean peninsula. And also waging on the greenback was a rally in the euro, with the pair EUR-USD rose to 0.56% to 1.1806 against the dollars after bullish trade data raised expectations of European Central Bank monetary policy tightening amid comments from an ECB officials on Monday. So Germany, the eurozone largest economy, revealed better than expected trade data as its trade balance expanded to 21.6 billion, which beating the economist's expectations of 20 billion. So Sabine Lautenschläger, a member of the European Central Bank Executive Board, urged the European Central Bank to roll back assets purchased in 2018. The sterling mid-bounce aided to recent gains against the greenback, rising 0.5% to 1.3209 on the back of manufacturing and industrial data that topped expectations. So total production's output in the industrial sector was 1.6% higher in August than a year before, against expectations of a 0.8% rise, while manufacturing output rose 2.8%, which topping focus of a 1.9% increase. And the safe haven Japanese yen held small gains in Asia on Wednesday after stronger than expected machinery orders data. So the pair USD JPY was changed hands at 112.42, down 0.02%. So in Japan's core machinery orders for August jumped 3.4% compared to with a 1.1% gain expected on month and a 4.4% pace on year compared to a 0.8% increase expected. Having a tap in commodities markets, gold price was eased in Asia on Wednesday, fell 0.27% to $1,290.10 a troy ounce, ahead of minutes from the Fed Reserve deal later in the day and expected to show a largely hawkish stance on the need for a December hike and into next year. So overnight, gold prices rose for the second day in a row, buoyed by the continued dollar weakness, while ongoing political tension between the US and North Korea lifted sentiment. So gold bullish starts to the weight continue as safe haven demands remain elevated amid ongoing geopolitical uncertainty on the Korean peninsula, while dollar weakness supported an uptick in demand for the precious metals. So gains in gold, however, were capped after the Catalan government Charles Puigdemont said he wanted to delay any formal declarations of independence, and this was easing geopolitical uncertainty in the regions. So dollar-denominated assets such as gold are sensitive to move in the dollar, and a dip in the dollar makes gold cheaper for holders of foreign currencies and thus increase demand. So according to a report from the Commodity Futures Trading Commission CFTC on Friday, despite the uptick in gold, recent data points towards possible weakness as the net bullish bets on gold fell to 203,900. As for the oil price, it was gained in Asia on Wednesday and rose 0.27% to $51.06 a barrel, ahead of industry estimates of US inventories as refineries in Texas recover from hurricane-related shutdowns. So later Wednesday, the American Petroleum Institute is to release its estimates of crude and refined products inventories at the end of last week. So followed by official data on Thursday from the Energy Information Administration (EIA), Usually, the API and EIA figures often diverge, so crude oil inventories are seen down by 1.8 million barrels, while distillates are seen down by 2.375 million barrels, and gasoline stocks expected to show a 1.025 million barrels decline. And overnight, crude oil prices settled sharply higher on Tuesday after de facto OPEC leader Saudi Arabia's vote to reduce monthly crude exports amid expectations that market rebalancing is underway. So crude oil prices had their best days in 2 weeks as sentiment turned positive after Saudi Arabia pledged to cut its November crude oil exports by 7% or 560,000 barrels a day. So compare with the same period last year in order to strengthen the market rebalancing process. So the gap between supply and demand in oil market is expected to narrow further in coming months amid a surge in global demand growth which has lifted oil prices above $50 a barrel. So the uptick in the crude oil price, however, fueled fears of an increase in shale oil productions, which becomes profitable at about $50 per barrel. Also, OPEC's Secretary General Mohammed Bakindo on Tuesday sought to allay investors' fears, calling on U.S. shale product producers to take responsibility and help cut global excess supplies in the oil market. So now we are going to review the highlighted economic data that released on yesterday, Tuesday, as well as the data and event for today, Wednesday. So yesterday, Tuesday, Japan has released its adjusted current accounts, and it was at 2.27 trillion yen, which is higher than the expectation of 1.98 trillion. Right. So during the morning sessions, besides of Japanese, the Australians was released the NZB business confidence, and it was showed the result at 7, which is better than expectations of 6. So during European trading hours, Switzerland has released its unemployment rate for September, and it will show a better than expected result with 3.1%. Right, of unemployment rate in Switzerland. Right. So as for the German trade balance for August, the figure showed 21.6 billion, which is higher than the expectations of 20 billion. So as for UK sites, manufacturing productions for August is at 0.4% growth, which is better than expectations as well. So during North American trading hours, Canada has released both housing data, including the housing starts and building permits, one for September and for August these building permits. Right. So housing start for September is one as 217.1 thousands. Okay. So which is higher than the expectations of 210,000. Right. So as for building permits, it was remained in the contracted territory with negative 5.5%. So as for today, we should focus on the OPEC monthly report as well as the API weekly crude oil stocks. Okay, is just the indications for the oil traders. Right. Besides of that, we also should focus on the highly anticipated FOMC meeting minutes, which due to release tonight, midnight 2 o'clock. All right. It's a technical analysis session, so first instruments were referring to the Great British Pounds against the US dollar in 4-hourly charts. So the sterling aided to recent gains against the greenback on Tuesday as manufacturing and industrial data that topped expectations. So the pair GBP USD was close above the resistance level of 1.318, signals to experience a short retracement and could move further higher in the short terms towards the next resistance level at 1.326. But however, it remained traded in a downtrend, which means it could fall further with a closure below the level just broken at 1.317. Then the next support level we could refer to the previous low at 1.303. The single currency strengthened after bullish trade data raised expectations of European Central Bank monetary policy tightening amid comments from an ECB officials on Monday. So against the greenback, it rejected from the resistance level of 1.183, and closing above this level could bring further retracement in short term and move further higher towards the next resistance level at 1.188. But however, the pair remained traded in a downtrend structure, thus closing below the support level of 1.176 again would suggest for further downsides, and we could refer the next support level at the previous low at 1.167. The kiwi remained weak against the greenback and hovering a tad above the support level of 0.705. So closing below this level would provide a signal for continuation of a current downtrend, and it could fall further towards the next support level at 0.698. On the upside, the first resistance level comes in at 0.714. The Aussie continued its retracement following formations of dive cross by both moving average line in 4-hourly charts. Currently, it traded near to the Fibonacci retracement level of 50 at 0.773, which considered as the trend direction shiftings freehold. So closing below this level could shift the trend directions, become downtrends, and fall further towards the next support level at 0.764. On the upside, the nearest resistance level could refer to 0.781. The safe haven Japanese yen held small gains in Asia on Wednesday after stronger than expected machinery orders data, with the pair USD JPY fell lower towards the support level at 112. So closing below this level could lead to experience short retracements, then we could refer the next support level at 111.1. But however, it remained traded in an uptrend, thus with a closure higher than the previous high at 113.5, was suggesting to continue its uptrend, and it could surge further higher towards the next resistance level at 114.4. While Japan is due to release the tertiary industry index tomorrow in Asia hours, and the index measures the change in the total value of services purchased by business, so it is a leading indicator of economic health. Gold price was eased in Asia on Wednesday ahead of minutes from the Federal Reserve later in the day, and expected to show a largely hawkish stance on the need for a sampled high and into next year. So in the precious metals 4-hourly charts, the price is seen to close above the resistance level of $1,283, which signals to experience a short retracement and could move higher in the short term towards the next resistance level at $1,297. But however, it remained traded in a downtrend that with another closure below the previous low at $1,260, was suggesting to continue its downtrend and fall further towards the next support level at $1,237 a troy ounce. So investors now are eyes on the meeting minutes of FOMC due later today for further clues on December rate hike. The crude oil price gained in Asia on Wednesday ahead of industry estimates of U.S. inventories as refineries in Texas recover from hurricane-related shutdowns. So the West Texas Intermediate crude price surged higher after following a rebound from the Fibonacci retracement level of 50 at $49.20 a barrel, and currently it is hovering a tad below the resistance level of $51.10. So closing above this level would provide a signal to continue its current uptrend, and it could surge further higher towards the next resistance level at $52.80. So on the downside, only with a closure below the Fibonacci retracement level of 50 was suggesting for shifting trend directions to fall further, and traders are waiting the estimations data from American Petroleum Institutes as well as the OPEC monthly reports to gauge the global supply and demand. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.